Good morning all. Today we are going to discuss about the second unit of accounting for business combination. Here we are going to study about the merger acquisition and how to do the journal entries under merger and acquisition. So before going to know about the journal entries, first we should know the basic concept of the purchase consideration. So what is the purchase consideration is all about? So, purchase consideration definition is it refers to the consideration payable by the transferee company to the transferor company for taking over all the assets and liabilities. So, when the merger and acquisition is happening, one company is purchasing the assets and liabilities of another company. So, when they are purchasing the assets and liabilities of another company, the company has to pay some lump sum amount to the other company. So that is known as a purchase consideration. So when we are calculating the purchase consideration, we are having three methods to calculate. One is lump sum method, one is net asset, another one is net payments. Today we are going to discuss about the lump sum method of the purchase consideration. So in lump sum method, what will happen? At a one time, we are paying a total huge amount to the company for purchasing the assets and liabilities. So in case of lump sum method, we have considered the two questions to discuss. So first one, let us see what is the question. So here they told that the total purchase consideration is rupees 2,60,000, which is to be discharged by issuing 1,60,000 equity shares of rupees 10 each and rupees 1 lakh in cash. So from this information, we need to calculate the total purchase consideration. So from the first line, you can understand that total payable amount is 2,60,000. So out of this 2,60,000, they are going to pay 1,60,000 in equity shares and balance 1 lakh they have to pay in cash. So how we need to show the breakdown? So here we can show the breaks or steps in such a way that they are going to issue 16,000 equity shares of rupees 10 each. So 16,000 equity share of rupees 10 each. So 16,000 share into 10. So total 1,60,000 they are going to pay in equity share. Excuse me. And balance 1 lakh in cash. So cash amount is 1 lakh. So total it will come 1,60,000 plus 1 lakh. So total purchase consideration is 2,60,000. So this is how we need to show the steps in calculation of purchase consideration. So let us see the second question. In second question, they said that total purchase consideration is 2 lakh, which is to be discharged by issuing 15,000 equity share of rupees 10 each, and balance we need to find out how much to be payable in cash. So here from the first line we can understand that the total amount payable is 2 lakh. Out of this 2 lakh, 15,000 equity shares they are going to issue, and balance out of 2 lakh whatever will be there that they are going to pay in cash. So here will be the breakout in such a way that first we have issued 15,000 equity shares. So per share value is 10 rupees. So 15,000 into 10. So total 1,50,000 we have issued in equity share capital. So out of 2 lakh of rupees, we have paid 1,50,000 rupees in equity share capital, and then balance 50,000 we need to pay in cash. So that is all our 2 lakh of rupees of total purchase consideration. Sometime in the question only they will give you the steps of the paying of the amount in equity share, debenture or in cash. But in some cases we need to find out the cash or other amount in balancing figure. Like in this question, 1,50,000 we have paid in equity share capital out of 2 lakh, and then balance 50,000 we have to find out that we have paid in a cash. So this is what about the small question on purchase consideration. Next class we will go and discuss about the next method of the purchase consideration. Thank you.